Hey, TGO traders, welcome to Tuesday's Market Sit Rep here at Top Gun Options. And futures are indicating up this morning, obviously still kind of floating on Yellen's speech yesterday in Chicago saying, hey, there's a lot of slack in the job market and we're going to keep rates low for an extended period of time. So here we go again, folks. We're in Bizarro market, where bad news is good news. We got a slack jobs market. Things really aren't that great out there, and the Fed's going to keep on printing money. And if they run out of ink, she's going to run to Staples and buy more ink. So really not great news, but the market's going to keep going up here. We've talked about this repeatedly, how the market and the stock market and the economy are just on diverging lines on a chart. Someday those two lines are going to have to meet, and it's not going to be pretty when in fact they meet. Relatively good news on China's manufacturing PMI, and Asian shares rose on that news, but it's very interesting because two sets of data came out. The manufacturing PMI from the government showed a 50.3, and any reading in a PMI above a 50 indicates expansion in the economy, but HSBC, which is obviously a huge bank and financial institution, came out with a 48, which means contraction. So Asian shares looking okay, came out and rose there, but seeing a little bit of a conflicting data there. But it shows that there are signs of improvement, but definitely that growth slowed relatively sharply in the first quarter, according to HSBC. But they also said, HSBC said, results point to the government likely responding with moderate easing measures, if not a big stimulus package. So there you go. That even in China, we got Bizarro market. So if manufacturing data aren't good, why don't we print some more money and come out with a stimulus package? So it continues, folks. Whether it's the PBOC, the People's Bank of China, or our own Fed, everybody gets a trophy and nothing's allowed to fail. Central banks around the world are going to continue to prop these markets up until when? And forever? Or we recognize that we can't do that, and there is a massive run on credit or on the market. So this really is one of those hold your nose rallies, and we're going to go higher here. I really would take a look at the VIX. The VIX is trading below 14, and for my TGO traders, we know that 14 is what I call the new 12. But I might start reevaluating that, to be honest with you. I think 12 might once again be the new 12 if the Fed, as she said yesterday, isn't going anywhere. So I have a live trading session this morning. We have weekly options and primary live trade brief. Going to do a joint brief this morning because I had a speech yesterday up here in St. Louis to give. So we're going to talk about these issues because it's just, again, as an American and as somebody who cares about the future of our country, what the Fed's doing is just, it doesn't work. It works if you're the evil 1%, and the wealth effect is you're really happy with what's going on. But to steal a famous Obama users or supporters line, the chickens are going to come home to roost eventually with all this quantitative easing, and the markets are going to react accordingly. We're gearing up for Q1 earnings season over the coming weeks. So usually I say if anything's going to bring this market down, it's going to be poor earnings. Well, even if we have poor earnings, I think bad news is once again going to be good news as we continue once again in Bizarro market, thanks to our Fed. So we go higher. All right, folks, I got to run. Happy hunting. Make sure you hedge, and I'll be back tomorrow with Wednesday's Market Sit Rep here at Top Gun Options. We'll see you.